Usually when I trade with a student, when they see a spready stock, they get scared. They see something, but because it's spready, they back off. And yesterday I traded these stocks, and I want to share with you the process, the thinking process of that trade. Let's talk about first the formation. Okay, there was a really good formation, like there was a pretty good momentum, went back almost to close the gap, and then side move around the VWAP, and I like to see that there was a higher low, and there was a resistance here, and that was above the VWAP. And let's talk about this stock, which I never trade before. There was an entry here on 24, I think 23, something like this. The stop was here, $1.50. So you're gonna say, wow, $1.50, it's a lot. And the spread was 50 cents. So kind of things that I like to measure. If the stop at least 3 times of the spread is 30% from the stop, it's totally fine with me. Like if it was 50 cents and the stop was $1.50, was pretty okay. Now another thing that, let's ignore now the spread, the trade itself. Good risk reward. Like there was an entry 24 or 25, there was a resistance around here 27, so it was risk reward 1 to 2, and then there was a risk high was around 30, which was almost more than 1 to 3.5, something like this. So the risk was there. Now time frame, 5 minutes looks good. Now if I would go even to 15, perfect. Like if you see something that in different time frame looks better, and 15 even better, and that's a quality of trading that time, go ahead. Now let's talk about this formation. Like we cover the issue of spread, which not relevant. Let's talk about formation. Day before I traded this stock, PDD. Again, great momentum, pull back to the VWAP, side move. I think there was like a 60-70 cent stop, but again, so what I'm taking from this, again, there was something at the beginning like it was in RGC, and when you have a momentum and it's a little bit fade, definitely you should watch the stock. Another stock in that day that I traded, again, was AFRM. Again, huge momentum down, closed the gap, or some, I don't remember. No, it was a low. Again, back, side to the VWAP, and stop, and just let it grow. So let's move to RGC. How do you handle those kind of spready stock? It's not a regular that, okay, I'm going to take a partial. It's based on those levels. So what I did, I saw a limit order exactly here. It was 27.50. I saw 27.40 even. Why? Because I know that the spread, I can catch it immediately. I want my order to sit there, and that's exactly what happened here. Look at this. High of this one was 27.45. This one 27.50 exactly. Okay, then pull back, see how beautiful the 9 is holding it, and then pretty simple, 29. I did put a little bit under. I put even 29.80, 20 cents under, because I knew that because of the spreads, 20 cents not a big deal. And again, it got, look at this candle, 29.96. got out. And then it fixed and even did more, which I'm okay with that. What you can learn, again, if you see good formation, that's the key. And if you have a good trading plan and you have a good risk reward, just let it grow.